Welcome to the exciting world of real estate investing. The realm of property investing is filled with a myriad of opportunities, and today we're going to delve into this fascinating subject. Real estate investing, in its simplest form, involves purchasing a property and making a profit from it. This could be through renting it out, selling it at a higher price, or even using it for business purposes. It's an age-old method of generating wealth, and it continues to be a popular choice for many individuals around the globe. The significance of real estate investing is manifold. First and foremost, it offers a tangible asset, something you can see, touch, and use. Unlike stocks or bonds, real estate is a physical investment, making it easier to understand and manage. Secondly, real estate investing can provide a stable income source. This could be through rental income, profits made from property-dependent businesses, or capital growth from selling properties at a higher price. Thirdly, real estate investing offers opportunities for diversification. This means that you can invest in different types of properties in various locations, spreading your risks and increasing your potential for profit. Lastly, real estate investments can provide tax benefits. In many jurisdictions, there are tax advantages associated with owning property, such as deductions on mortgage interest, property taxes, and operating expenses. However, as with any investment, real estate investing isn't without its challenges. It requires a significant amount of time, effort, and financial resources. It also involves risks such as property damage, market fluctuations, and problematic tenants. But fear not. With the right knowledge and strategies, you can mitigate these risks and make the most out of your real estate investments. In the next few minutes, you will learn some beginner-friendly tips and strategies to get you started on your real estate investing journey. So buckle up and get ready to dive into the world of real estate investing. Before you dive into real estate investing, you need to know the different types available. These types each offer unique opportunities and challenges, and understanding them is the first step to making smart, informed investment decisions. First, let's talk about residential properties. These are homes where people live, like single-family houses, condos, townhouses, and even apartment complexes. Investing in residential properties can be a great starting point for beginners due to their familiarity and the constant demand for housing. However, the downside is that these properties can require significant hands-on management, especially if you're renting them out. Next up is commercial properties. These include offices, retail spaces, and shopping centers. Commercial real estate can offer higher income potential than residential properties, thanks to longer lease terms and the potential for multiple revenue streams if the property houses more than one business. However, these properties can also be more expensive to buy and maintain, and the success of your investment can be heavily tied to the health of the local business community. Then we have industrial real estate. These are properties like warehouses, factories, and distribution centers. Industrial properties can offer strong returns and relatively stable cash flows, especially in areas with robust manufacturing or logistics industries. Yet, they can also be subject to economic cycles, and their specialized nature can make them harder to rent or sell if the local industrial sector takes a downturn. Lastly, we have raw land. This is undeveloped property without any buildings or improvements. Investing in raw land can offer significant profit potential if you buy in an area that later experiences growth. However, it can also be risky, as you're essentially betting on future development. Plus, raw land doesn't generate income until it's developed or sold, which can tie up your capital for a long time. Each of these types of real estate investments comes with its own set of pros and cons. Residential properties can provide steady income and are relatively easy to understand, but they can also require a lot of management. Commercial and industrial properties can offer higher returns and longer leases, but they're also more expensive and can be affected by economic trends. Raw land carries the potential for high profits, but it's also speculative and can tie up your capital. Your choice among these types should be guided by your financial goals, the amount of time and effort you're willing to put into your investments, and your tolerance for risk. For example, if you're looking for steady cash flow and don't mind hands-on management, residential properties might be a good fit. But if you're more interested in long-term growth and don't mind taking on some risk, you might consider commercial properties or raw land. It's crucial to understand these types to determine which ones align with your financial goals and risk tolerance. So take the time to learn about them, weigh the pros and cons, and make the choice that's right for you. Now that you know the different types of real estate, let's look at some popular investment strategies. These strategies are the building blocks of your investment portfolio, each with its unique approach and potential returns. First up, we have the buy and hold strategy. This strategy is all about patience and long-term growth. Here, investors purchase a property and hold on to it for an extended period, allowing the value to appreciate over time. Next, we have flipping. No, we're not talking about pancakes here. Flipping in real estate refers to purchasing a property at a lower price, typically one that's run down or in a less than ideal state, refurbishing it and then selling it at a higher price. The third strategy is wholesaling, which is akin to being a middleman. In wholesaling, you sign a contract with a homeowner to buy their property, then sell that contract to an investor before the deal closes. The profit comes from the difference between the price you agreed with the homeowner and what the investor is willing to pay. Finally, we have the rental strategy. This is where you purchase a property and rent it out to tenants, collecting monthly rent. It's a bit like having a cash machine that prints money every month, but remember, no strategy is a silver bullet. Each one comes with its own set of risks and potential rewards. The buy and hold strategy, for instance, requires a significant initial investment and patience to see returns. Flipping can be profitable but also risky if renovation costs spiral out of control. Wholesaling requires a keen eye for undervalued properties and a network of willing investors. And while the rental strategy can provide a steady income, it also comes with responsibilities like property maintenance and dealing with tenants. Each strategy has its own potential benefits and risks, so choose one that best suits your investment goals. The world of real estate investing is exciting and full of opportunities, so grab your hard hat, roll up your sleeves, and let's get building. One of the biggest challenges in real estate investing is securing financing. Indeed, financing is the backbone of any successful real estate investment. Without it, even the best-laid plans can crumble. So let's dive into the different ways you can finance your real estate investments. First up, we have self-financing. This method involves using your own savings or personal wealth to fund your investment. The most significant advantage of self-financing is that you maintain full control over your investment decisions. You're not beholden to a bank or a lender and their terms and conditions. However, the downside is clear. Your financial resources are finite, and investing in real estate can be capital intensive. It's essential to ensure you have enough reserves for unexpected costs and market fluctuations. Next, we have bank loans, a conventional method of financing real estate investments. Banks offer various loan types, such as mortgages or business loans, depending on your investment. The advantage of bank loans is that they can provide substantial capital at relatively low interest rates. However, securing a bank loan requires a good credit score, stable income, and sometimes collateral. Plus, repaying the loan becomes a fixed monthly expense that you must account for in your investment calculations. Private lenders are another source of financing. These are individuals or companies willing to lend money for real estate investments. Private lenders often have less stringent requirements than banks, making them an attractive option if you're struggling with bank financing. But they usually charge higher interest rates to compensate for the increased risk. Finally, let's talk about real estate crowdfunding platforms. These platforms pool money from multiple investors to fund a real estate project. They democratize real estate investing, allowing people to invest with a fraction of the capital typically required. The downside is that your investment is tied up for a predetermined period, and the return on investment depends on the project's success. It's important to note that these financing methods aren't mutually exclusive. You can combine them in various ways to suit your needs. For instance, you might use a bank loan for the initial purchase and a private lender for renovations. Remember, each financing method comes with its own set of pros and cons. Your choice should align with your investment strategy, financial situation, and risk tolerance. It's advisable to seek advice from financial advisors or experienced investors to make an informed decision. In conclusion, financing is a critical aspect of real estate investing. It's not just about finding the money, it's about finding the right kind of money, the kind that aligns with your investment strategy and financial goals. It's about making your money work for you, not against you. Always weigh your financing options carefully and choose the one that aligns with your financial situation and investment strategy. Understanding the real estate market is crucial to your success as an investor. Let's delve into the intricacies of how to analyze the real estate market effectively. There are several factors to consider, such as location, demand and supply, and economic indicators. We'll also briefly touch upon the importance of understanding local zoning laws. The old saying, location, 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 holds true for a reason. The location of your real estate investment can significantly impact its value and potential for profit. For instance, areas with access to quality schools, public transportation, and local amenities like shopping centers and parks are more likely to attract tenants or buyers. Additionally, locations with low crime rates and a clean environment are more desirable. Therefore, research the area thoroughly before making an investment decision. Next comes demand and supply. In essence, the real estate market functions like any other market. Prices rise when demand exceeds supply and vice versa. When there are more people looking to buy or rent properties than there are properties available, prices will likely go up. Conversely, if there are more properties than interested buyers or renters, prices could drop. Keeping an eye on these trends can help you determine the right time to buy or sell. Economic indicators are another crucial aspect of understanding the real estate market. These indicators include things like unemployment rates, wage growth, and mortgage interest rates. For instance, a low unemployment rate and steady wage growth can signal a strong economy, which might lead to a robust real estate market. However, high mortgage interest rates could deter potential buyers, potentially slowing down the market, so always keep a pulse on the economy. Lastly, but certainly not least, is understanding local zoning laws. These laws dictate what can and cannot be built on a piece of land. For example, a property might be zoned for residential use only, meaning you can't build a commercial building there. Understanding these laws is vital because they can significantly affect your investment's profitability and overall plan. In conclusion, a thorough understanding of the real estate market is a must-have tool in an investor's arsenal. It's not just about buying a property and hoping for the best. It involves careful analysis of various factors like location, demand and supply, economic indicators, and local zoning laws. Stay informed about market trends and local laws to make informed investment decisions. Your success as a real estate investor greatly depends on it. Real estate investing isn't a solo journey. You'll need a strong team to succeed. Building your real estate team is like assembling a jigsaw puzzle. Every piece, or in this case, every member, plays a vital role in completing the picture. So, let's delve into the key roles that make up a real estate investment team. Firstly, real estate agents. They're your eyes and ears on the ground, scouting for properties that fit your investment strategy. Their network and knowledge of the local market can help you find deals that you might miss on your own. But their role extends beyond just finding properties. They can help in negotiating the price, navigating paperwork, and even provide valuable insights about the neighborhood. Next up, property managers. They're the superheroes who keep your investment properties running smoothly. From finding and vetting tenants to handling maintenance issues and collecting rent, they take care of the day-to-day operations. Having a good property manager can free up your time, allowing you to focus on growing your portfolio. Then come the lawyers. Real estate investing is filled with legal nuances. From property contracts to tenant laws, a real estate lawyer can guide you through the legal labyrinth. They can also help protect your interests and ensure that you're on the right side of the law. Accountants, too, are an indispensable part of your team. They can help you navigate the complex world of real estate taxation, ensuring you're maximizing your tax benefits and keeping your finances in order. They can also advise you on the financial implications of your investment decisions, helping you make smarter, more profitable choices. Lastly, don't forget about contractors and maintenance personnel. These are the people who keep your properties in top shape. Whether it's a leaky faucet or a major renovation, having reliable contractors can save you a lot of headaches and ensure your properties continue to attract and retain tenants. Each member of your team brings unique skills and expertise to the table. But remember, it's not just about filling roles, it's about finding the right people. People who understand your investment goals, share your work ethic, and are committed to helping you succeed. Building your team can take time. You might not find the perfect fit right away, and that's okay. Don't rush. Take the time to interview potential team members, check their references, and ensure they're a good fit for your team. Remember, a competent and reliable team can make your real estate investing journey smoother and more profitable. It's not just about buying properties, it's about building relationships and working together towards a common goal. So, Take the time to build your team. Your future self will thank you. Like any investment, real estate comes with its own set of risks and challenges. Let's delve into some of the common risks and challenges you might face in real estate investing. First up, market fluctuations. Real estate markets can be volatile. Property values rise and fall due to a myriad of factors like economic conditions, interest rates, and even regional developments. It's crucial to understand that the value of your property may not always go up. Sometimes you might find yourself in a situation where you've invested in a property and its value is less than what you initially paid. It's a bitter pill to swallow, but it's part of the game. Now let's talk about property damage. Whether it's a natural disaster like a hurricane or an earthquake or human-induced damage, your property is always at risk. Even the best-kept properties can fall victim to unexpected damage, which can be a significant financial setback. Having a plan in place for these unexpected situations and ensuring you have the right insurance coverage can be a lifesaver. Moving on to tenant issues. If you're renting out your property, you're likely to face tenant-related challenges. This could range from late or missed payments to property damage to dealing with difficult tenants. It's important to have a robust screening process for potential tenants and clear enforceable lease agreements to mitigate these issues. Legal complications are another challenge you might face. Real estate laws can be complex and vary greatly from place to place. It's not just about knowing the laws relevant to owning and renting a property, but also about zoning laws, tax laws, and even laws pertaining to selling or transferring the property. It's always a good idea to have a reliable legal advisor on your team to help navigate these complexities. Now, all these risks and challenges might sound daunting, but remember, every investment comes with risks. The key is understanding these risks and managing them effectively. This could mean doing thorough market research before investing, ensuring your properties are well maintained and insured, having a rigorous tenant screening process, and seeking legal advice when necessary. The truth is, real estate investing is not a get-rich-quick scheme. It requires patience, diligence, and a good deal of learning and adapting. But with the right approach and mindset, it can yield significant returns and provide a steady income stream. Being aware of these risks and challenges can help you prepare for them and mitigate their impact on your investment. The journey of real estate investing is filled with opportunities, but also with risks and challenges. By acknowledging and preparing for them, you can make sure that the road, while not always smooth, leads to a rewarding destination. So, you've learned about the basics of real estate investing, the different types and strategies, financing options, understanding the market, building your team, and the potential risks involved. Let's take a moment to reflect on this wealth of knowledge we've covered. We started with the basics of real estate investing, where we learned that it's more than just buying a property and selling it for a profit. It's about understanding the market trends, identifying the right opportunities, and making informed decisions. We then delved into the different types of real estate investments, from residential to commercial and from rental properties to real estate investment trusts. The options are plentiful and diverse. Each comes with its own set of benefits and challenges, and understanding them is key to choosing the right investment type for you. We also explored various investment strategies. Whether it's buy and hold, fix and flip, or investing in rental properties, each strategy has its unique approach and potential returns. Choosing the right strategy depends on your financial goals, risk tolerance, and time commitment. Financing your real estate investment is another crucial aspect we touched on. From traditional mortgages to hard money loans and private lenders, there are numerous financing options available. The key is to weigh the pros and cons of each and choose the one that fits your investment strategy and financial situation. Understanding the real estate market is fundamental to successful investing. Market trends, property values, demand and supply dynamics, they all play a significant role in your investment success. Building your real estate team is equally important. A reliable team of real estate agents, lawyers, accountants, and property managers can make your investment journey smoother and more profitable. Lastly, we discussed the potential risks involved in real estate investing. It's a venture that comes with its share of challenges, but with adequate knowledge and the right strategies, these risks can be managed efficiently. Remember, real estate investing is a journey. It might be challenging at times, but with the right knowledge and strategies, it can be a rewarding venture. Good luck on your real estate investing journey.